What if one prediction could completely change how investors look at Ethereum forever? Not a prediction of a few $100s, not even a few thousand, but more than $22,000 for a single Ethereum. At first, it sounds impossible, maybe even ridiculous. After all, people have made outrageous crypto predictions before. Many of them never came true. But this time, the prediction isn't coming from an anonymous influencer looking for clicks. It's coming from Tom Lee, a Wall Street strategist known for making bold calls long before most people believed them. He's correctly anticipated major market recoveries, defended Bitcoin during its darkest moments, and built a reputation for seeing trends others completely miss. So when Tom Lee says Ethereum could eventually reach $22,000, investors pay attention. Because if he's right, everything about today's crypto market could be dramatically undervalued. But if he's wrong, millions of investors could be chasing a dream that never arrives. So what does Tom Lee actually see? And could Ethereum really become one of the most valuable financial assets in the world? The answer is far more fascinating than most people realize. Most people think Ethereum is simply another cryptocurrency, a digital token that rises and falls with Bitcoin. But here's where things get interesting. Tom Lee doesn't believe Ethereum should be valued like a cryptocurrency at all. He believes investors are looking at the wrong numbers. Instead of asking how many people are trading ETH, he asks how many financial systems are beginning to depend on Ethereum. That's a completely different question, because history has shown something remarkable. The world's most valuable companies weren't built because people loved their stock. They became valuable because people relied on their services every single day. The internet wasn't valuable because people collected websites. It became valuable because businesses couldn't function without it. Could Ethereum be entering that same phase? That's the mystery we'll explore. Because if Ethereum is becoming digital infrastructure instead of just digital money, then Tom Lee's prediction suddenly starts sounding less like hype and more like a mathematical possibility. Ethereum launched in 2015 with an ambitious goal. Instead of simply creating digital money, it wanted to become a programmable blockchain. Developers could build applications directly on top of it. At the time, very few people cared. The technology seemed complicated. Transactions were slow, fees could become expensive, and critics argued Ethereum would never scale. Then something unexpected happened. Developers kept building anyway. Decentralized finance emerged. NFTs exploded into mainstream culture. Stablecoins quietly processed billions of dollars. Entire businesses began operating without traditional banks. Suddenly, Ethereum wasn't just another blockchain. It had become an ecosystem. Today, thousands of decentralized applications run on Ethereum. Billions of dollars move across the network. Major financial institutions are experimenting with tokenized assets. Governments are researching blockchain infrastructure. And companies that once dismissed crypto are now exploring Ethereum as a settlement layer. But here's where things get interesting. The average investor still tends to focus on price charts. Tom Lee focuses on adoption. Because throughout history, technology often looks expensive right before it becomes indispensable. Amazon once appeared massively overvalued. Apple was dismissed multiple times. Even the internet itself went through painful crashes before reshaping the global economy. Tom Lee believes Ethereum may be following a similar pattern. Not because prices always go up, but because utility has a habit of creating value over long periods of time. So what exactly supports a $22,000 Ethereum? Tom Lee's argument isn't based on hope. It's based on demand. Every action on Ethereum requires ETH. Every smart contract, every decentralized application, every token transfer, every financial transaction. ETH acts as the fuel powering the entire network. That creates an interesting economic model. As more activity moves onto Ethereum, demand for ETH naturally increases. Then Ethereum introduced another major change. A portion of transaction fees began getting permanently destroyed. Instead of creating unlimited new supply, parts of the existing supply disappear forever. Imagine a growing city where new businesses open every day, but pieces of available land slowly vanish. Demand rises. Supply becomes tighter. Prices often respond. Now combine that with institutional adoption. Banks exploring tokenized assets. Investment funds buying ETH. Companies holding Ethereum on their balance sheets. Each new participant removes additional supply from the market. Tom Lee believes this creates powerful long-term economics. Not because speculation alone drives prices, but because increasing usage and limited supply can reinforce each other over time. But the real story may not be Ethereum itself. It may be what's happening to the financial system. For decades, finance has relied on layers of intermediaries. Banks, clearing houses, settlement companies, payment processors. Every transaction takes time. Every step adds cost. Now imagine a system where ownership transfers almost instantly. Assets settle around the clock. Records remain publicly verifiable. That's what tokenization promises. And here's where things get interesting. Major institutions aren't simply talking about blockchain anymore. Many are actively testing it. Stocks, treasury bonds, real estate, private equity, money market funds. All of these assets could eventually exist digitally on blockchain networks if trillions of dollars begin moving this way. The underlying infrastructure becomes incredibly valuable. Tom Lee believes Ethereum has positioned itself as one of the strongest candidates for that infrastructure, not because it's perfect, but because it already has developers, applications, liquidity, security, and years of operational history. History often rewards the platform that reaches critical adoption first, not necessarily the one with the flashiest technology. That's exactly what happened with the internet. The winners weren't always technically superior. They simply built the strongest ecosystems. Ethereum may be attempting the same thing. This is where Tom Lee's thesis becomes much larger than a simple price prediction. Imagine evaluating the internet in 1998. Many investors focused on slow websites, dial-up connections, expensive computers. They underestimated where the technology was heading. Tom Lee argues many investors are making a similar mistake today. They're evaluating Ethereum based on current activity instead of future infrastructure. Think about what happens when technology reaches mass adoption. Electricity wasn't valuable because people admired power lines. It became valuable because everything depended on electricity. Cloud computing wasn't valuable because people liked servers. It became valuable because businesses needed them. Ethereum could follow a similar path, not because everyone buys ETH, but because millions of people unknowingly use applications powered by Ethereum. When someone sends tokenized assets, trades digital securities, uses decentralized identity, moves stablecoins internationally, or interacts with financial applications built on blockchain, Ethereum could quietly process those activities in the background. Most users may never even realize it. The internet works the same way. Billions of people use complex infrastructure every day without thinking about the underlying technology. If Ethereum becomes invisible infrastructure, its value could increasingly reflect economic activity instead of speculative excitement. That's a completely different investment framework. Instead of asking how many traders are buying Ethereum, Tom Lee asks how much of the world's financial activity could eventually depend on Ethereum. Even capturing a small percentage of global finance would represent enormous value. And that's why his price target appears so dramatic. It isn't based solely on crypto enthusiasm. It's based on the possibility that Ethereum evolves into financial infrastructure on a global scale. Whether that happens remains uncertain, but the framework itself forces investors to think differently. Of course, no investment thesis is complete without considering what could go wrong. And there are plenty of risks. Ethereum faces intense competition. New blockchains promise lower fees, faster speeds, greater scalability. Some may eventually outperform Ethereum in certain areas. regulation remains another major uncertainty. Governments around the world are still determining how blockchain assets should be treated. New regulations could accelerate adoption, or they could slow innovation significantly. Technology itself presents challenges. Scaling solutions continue improving, but user experience still needs work. Mass adoption won't happen if blockchain remains difficult for ordinary people to use. Then there's valuation. Even if Ethereum becomes incredibly successful, markets rarely move in straight lines. History shows that revolutionary technologies often experience enormous crashes before reaching new highs. Bitcoin has fallen more than 70% multiple times. Major technology stocks have done the same. Ethereum has already experienced brutal bear markets. Future declines are almost inevitable. Tom Lee himself would likely acknowledge that long-term success doesn't eliminate short-term volatility. Another important risk is expectations. When investors hear a target like $22,000, some assume it's guaranteed. That's dangerous thinking. Markets don't reward certainty. They reward probabilities. Tom Lee presents a thesis, not a promise. The difference matters. Successful investors constantly update their views as new information emerges. Blind belief has never been a winning investment strategy. Critical thinking always matters. So, is Tom Lee right? The honest answer is, nobody knows. No one can predict markets with perfect accuracy. Not Wall Street, not billionaires, not crypto influencers. But perhaps that's the wrong question. Maybe the better question is this: is Ethereum becoming something much bigger than most people currently recognize? Because history has repeatedly shown that transformational technologies often appear overpriced before they become essential. The automobile replaced horses. The internet transformed communication. Smartphones changed everyday life. Every major technological revolution looked uncertain while it was unfolding. Ethereum now stands at a similar crossroads. It could become the financial operating system of the digital economy, or it could be overtaken by something entirely new. That's what makes this story so compelling. Tom Lee isn't simply making a price prediction. He's making a prediction about the future of finance itself, a future where assets move instantly. Ownership becomes programmable. Markets never close. And blockchain infrastructure quietly powers transactions across the globe, whether Ethereum reaches $22,000 or not. The bigger transformation may already be underway, because the greatest opportunities in history rarely become obvious until after they've changed the world. And by then, the biggest gains often belong to those who recognize the shift before everyone else. The question isn't whether the future is coming. The question is who will recognize it first.